So let's start off by putting things into context. You know, we faced a little bit of a speed bump during COVID, but things are now back on track. What have been some of the key learnings for you, in that time period? If we look at a 5-year journey, where are we at now? How are things coming back on stream? Rajeev, let me start off with you.
Thank you, Aabha. Obviously, it's been a tougher phase for the world, for country, for everyone. So we can't deny that. But this world has, from a small finance bank perspective, a new bank perspective, clearly brought out the one degree of diversification that we have in a portfolio. It has highlighted some of those elements. It has strengthened our compliance, our regulatory and our collection infrastructure, portfolio quality infrastructure. It's brought out new learnings on the risk models. Obviously, if I speak that this phase has taught us digital, I think it's taught everyone the power of digital. So that is a cliche in some sense. It has proved the resilience of some of the banks that were newly built and the fundamentals, the strength of their business models, the strength of their teams and overall governance. I think it got all tested. It's in some sense the stress testing of the models and the fact that almost all institutions have come out strong out of this difficult 2.5-year phase. It's a testimony to the new business models that got established last 5 years.
Right. Anubrata, there's also been a major shift towards the secured side of business. So tell us, for you, what have been some of the key takeaways post-COVID?
So let me give two big trends, one obvious, one not so obvious, one linked to COVID, one not linked to COVID. The first is obviously digital, but I want to counter it with a little bit of data. If you really look at online purchase percentage of, say, large telecommunication companies, broadly now 55 to 60% of recharges is now online. That percentage was somewhere in 35 to 40%. It moved up to 65%, it dropped to 60%, but it's remained flat. This is a broad proxy for the fact that consumers are consuming more digitally, and that's going to continue. The second big trend is that we've seen increasing formalization and therefore greater usage of bank accounts in the system, primarily driven by first government subsidies and the second by the usage of GST, and therefore a growing percentage of digital transfers and withdrawals from accounts. How the payment back model fits in very sweetly into that is that we offer a service, one based on reach. We are closer to any Indian than any bank in the country. And the second, through digital, we are actually closer to more Indians digitally than any other bank in the country. To put it simply, we have a network of 350,000 banking points, roughly 60% of them in tier 5 and tier 6 villages. That's the largest banking network in the world. And the second is we are part of an application on the phone, which has 80 million users every month, which makes it one of the top 3 apps in the country today. We've been able to hardwire, rewire that for better consumer experience. And as a consequence, we are what we believe in a small community of payment banks, such as Rishi of Fino Payments Bank, who are profitable because they are at scale, leveraging these two pillars. Those are the trends I'd really like to talk about.
Amazing. Rishi, let me get your view as well.
I think when COVID hit us in 2020, there's a lot of stress in terms of what is going to happen. So I coined this COVID means creating opportunities in virus-infected days. And that's how we have built this entire model from the period of stress to rebuilding the model and then to further strengthening the model. I think that has been the game changer. I would say the biggest thing for me is the resilience of the customer. When the COVID hit us, you saw millions of people moving away from urban to rural. It was the reverse migration which actually happened. And everybody was looking at jobs, what will they do in rural. So a lot of them actually became our merchant points and started to do transactions through our platform. I would say a lot of things have been said by Rajeev and Anubrata in terms of digitization, in terms of the way the entire banking has evolved in the last 2-3 years. I think the customer has now many choices. Apart from the fact that he has a choice to go to a branch, he has a choice to go to a mobile or a merchant point. There are different models which have evolved during COVID, and digitization has actually helped us. Technology has helped us to reach the last mile, especially when we look at the fact that till now nobody was really worried about the 600-700 million people, how will they do banking. And government subsidies of the nature of PM Kisan, the subsidies around the COVID, when government reached out 10,000 crores per month, the branches were not working, the ATMs were not working. At that point of time, the entire subsidy disbursement happened smoothly. And that's the power of, I would say, the payments bank, the way we have evolved over the last 3 to 5 years. And especially, as Anubrata also said, many of us are now profitable. So we have made out a business case, a business model out of the fact that when the payments bank came out, people were worried whether there's really a business model or not. So technology, digitization, customer resilience, I would say, is one of the biggest things when I look at the era in the last 3 to 5 years.
Yeah, but things were a little different for you, of course, Sanjay.
Sorry?
I said things were obviously a little different for you compared to the others, but take us through your perspective as well on the entire market.
We all know about this, that this is a once in century kind of event. And I'm running this business from last 27 years and haven't gone this kind of tragedy, this kind of despair, this kind of negativism in those days, right? But I'm very happy that, we were running a public platform, which is bank. So my key takeaways for 2-3 in those days that customer became very loyal to you. I don't know why. Because my deposit actually grew rather than we were more afraid that people will take money out. But people started more believing in us and making our deposit grow and grow. And we actually also helped them a lot. So our bond with customer grown manifold. I don't know why, because we were open in those days. We were doing many things for them. Even we were supplying medical help, or we were even counseling them. We were telling them the world become better and better. But our bond with customer gone to the next level. And we generally lend to the semi-urban and rural markets, And many people challenged us that, because world is not designed for lockdowns. World is designed for 24/7 working, right? So if lockdown happened, if my customer don't earn and pay, then what will happen to your asset quality? You will be losing much money. But, to surprise to me, there was some schemes from government that, you should have some kind of leave it not to pay. But as soon as, the normalization came in, people started paying you. 60% people even paid you in the lockdown days. So that shows the resilience of the customer, right? So first key takeaway for me was the validation of my business model. And I've become much confidence that if people have survived COVID, people has given you money in COVID days, people has repaid you after COVID time, then this business model is there for forever, right? And the kind of employees, because we were running a bank and we are essential services, employee has to come and deliver banking services, and they were willing to come and give the, their 100% to the public. I think that was really, really heartwarming, because to ask at those times that, you come and deliver for the public, it was not easy for me, right? So that made me very proud of my team, and third, how the world came together to come out from this situation was very heartwarming, because we all came together and handled the situation well. So in spite of so many differences, in spite of so many challenges we take every day in life, but crisis makes us one, right? So that's what the key takeaways for me.
The human element there.
Yeah, human element. Yeah.
Okay. Anubrata, let me come to you on the way forward now, what the future model's looking like. Because, like I said, there's been a shift towards secured. There are some challenges because we're heading into a high interest rate era. Cost of funds are high, yields are low, don't have that flexibility on the deposit rate front. How do you, imagine maneuvering through some of the challenges now in the next couple of years going forward?
Well, firstly, I must place this firmly on the table. I'm not worried at all. In fact, I'm much, much more positive for a few simple facts. Firstly, if you look at the consumer, ultimately the banking industry today is what the soap industry was in the 70s. You had one bar of soap. It was used for washing clothes, It was used for washing yourself. Fast forward that 30 years forward, you've got a wide variety of soaps which are used for manifold purposes, including cosmetics, to just the pure basic purpose of cleaning. The purpose of differentiation in banking is not yet well served, and consumer uptake is going to be very strong as a consequence of that. That's the first fact. The second fact is, what are some of the fundamental prisms of differentiation? Let me give an example. It's quite well known that banking, payment banks, direct banks, internet banks offer value and convenience. Our banks offer that. But one big understated factor of offtake was safety. 57% of urban India is fundamentally worried about their accounts getting exposed to financial frauds perpetrated with the UPI ecosystem, and therefore they do not end up using their primary bank account for digital payments. And the payment bank account becomes a natural secondary digital account, which people uptake, choose and use. So there could be many prisms and therefore many reasons for people to uptake formal banking services more. And finally, a little provocatively, typically when you lend to a customer, you tend to start looking at margins. You mentioned cost of funds, and you start looking at what are the NIMs you make. We look at it very differently. The model is very simple. Today, we serve over 50 million users every month. We earn 20 rupees per user per month. By the way, we tend to spend 18 rupees. We are firm believers in the fact that in a 500 million underbanked opportunity in India, the 50 million can become 100 million, and the 20 rupees can become 40 rupees. And you can do the mental maths yourself of what that means in terms of revenue growth. But most importantly, we believe that that model will finally serve India well.
I mean, that's when you think of that outlook, the numbers are mind-boggling. You're both looking very skeptical there. So do you want to add something? Do you want to jump in here, Rishi?
So for what?
On the numbers, I mean, are you in agreement with the kind of scale that's possible on this front?
Yeah, of course, but just to add on from my friend is this, that from last 5 years, we are seeing one thing after one, right? We saw demonetization, we saw GST implementation, we saw NBFC crisis, then we saw bank crisis, then we saw COVID, right? So I think we as a business runners need to handle this kind of crisis, right? So there is no perfect world. So in my opinion, whether the interest rates goes up or there is a Ukraine crisis or there is maybe anything more coming in, we as a bank has to run our business, right? So we need to handle it by balancing it out, whether you want to hike your rate, you want to lower your OPEX, or you want to manage on the credit cost, or you want to lower down your growth, it's just management. But I think India is on the different terrain, and, we as a banker are too much excitement around us, right? Because if you grow by 7%, banking will grow by 3 times that, right? So 25%, 30% growth will be there, right, for next 10 years. So I'm equally excited to be part of this whole journey.
So clearly all of you are very optimistic on the state of the economy, the way forward, because when you're talking about your plans, and you're all nodding now, you're all in agreement. You're very gung-ho on the prospects.
Absolutely, and especially when I look at the new generation banks, the SFBs and the payments bank, we have come in an era of technology. When India Stack is there, digitization is there, we don't have any legacy systems. Our customer OneView is there, we are built up on data, and now OpenAI and AI are coming in. So a lot of those technologies and systems are already there. We are looking at the next 600, 700 million people who don't have banking per se. And as payments bank, we started with payments and managing cash withdrawal, remittances, basic banking services for which every person goes to the branch, especially the mass market segment which we're talking about. Now from payments, we have moved to liabilities. Tomorrow we'll move to credit, investments. So the product offering itself is quite big. Plus with technology, technology is a big leveler. It doesn't differentiate between whether you are rich or poor, whether you are educated, non-educated. To some extent, everybody can use an app. 80% of our merchants, 40% of them are graduates, 80% of them are on social media. We have 65% of our customers were using WhatsApp, UPI services. So technology has actually made it possible for us to grow, and it's infinite options which are available. You just need to build the right products for the right customers. As I say, if a customer needs Maruti, give him Maruti, don't give him Mercedes. And especially the new generation banks are very focused in terms of the kind of products they are building, because we are servicing a particular set of customers. Like if Sanjay is serving MSME, so he is largely if he's serving a MSME. So his focus is to develop products on MSME. He's not getting confused with corporates and other side of, unlike many other bigger banks and entities. So opportunities are immense. You need to just keep your focus, get the right products, and get the right technology in place so that you can harness the opportunities. And I think that's the way I look at in India. In fact, that's the brightest spot in India amongst all the countries which we are hearing about.
So what about all the competition that's also coming in from some of the private banks? You know, the small private banks, they're also shifting into this space. Is that a challenge with the landscape? You know, we've already seen small finance banks have maybe 1% of the overall market. And the opportunity is huge, Anubrata, as you said. But there's also heightened competition in this space.
I think when we walked into these licenses, the competition was equally intense, and in some sense, we did not have the credibility of the track record. This was a very basic question which was asked to almost all of us who were raising equity in the private round or the public round, that how would you raise deposits? Deposits will come with a lot of trust. Why would people, sort of give you deposits? It's a very basic question on deposits. And as Sanjay said, pretty much we had principal confidence on the fact that on the lending side, we have a niche segments, to the point Rishi was making. The markets that we attack on the lending side are in the rural areas, the semi-urban areas. It's a vast majority. We have grown up by doing that business in a profitable manner, whereas some of the bigger banks do that as a PSL target, which probably could be a loss-making objective for them or minimize losses for them. So in that context, this was a core profitable business for us, which had already grown up. So we are not really worried about the asset side of the business. On the liabilities, again, the fact that the market is so huge, and frankly, to the point Rishi made, the technology being a great leveler. So we had the reasonable confidence that for the size of the balance sheet that we are building, we are not really building a 5%, 10% market share out of the larger banking system. We were starting all small with decimal numbers, and so what we have seen is that as long as we can service our customers appropriately, what we call ourselves doorstep service, digital offering, and with the right deposit rates, okay? Clearly the customer needs all three. And if you service them with all the three components, you should be able to raise reasonable deposits. And we do have to give a slight premium to our deposit rates, but luckily, again, as Sanjay was alluding, because the kind of business that we do, with the kind of NIMs that we enjoy, our ability to absorb a 50 to 100 basis point higher deposit is there. The business model remains profitable. And in that framework of the deposit franchise, what we have been able to do is, we've been able to raise deposits in line with our asset growth, which could be 20%, 30%, or 40% in some years. So actually, we are a little less fearful of competitive position right now than what we were 4 years back. And we have created the way of working, and we have learned it over the last 5 years.
Yeah, and yes, please. And I was actually going to even ask you certain challenges that you found in the model with regards to scale as well.
No, so I just add on what Rajeev had just commented, that if you go back and see last 5 years, every good financial institution, be it bank, be it NBFC, has grown north of 20% in this country in spite of so many challenges, right? And we were around 2-3 trillion kind of economy, right? What we are discussing now, next 10 years, India will become $10 trillion economy. I was in US last year when, I figured out that in a $30 trillion economy, there are 4,000 banks. 4,000 banks, right? In India, how much? We are just 30 banks in India. If you count, PSU will be around 10, private sector around 15, and then we have some foreign banks, right? So, and then how many NBFCs, right? So scale we haven't seen in this country as of now. In my opinion, next 10 years, I don't think, to be very honest, there is much more around competition. Because if your top 10 institutions are growing not of 20-25% every year on year, where is the competition? If there is so much of competition, then nobody will grow even 10-15%, right? So I think my subject is this, that, we need to understand the customer, build product, build team, build service levels, and just go and execute. It's an India story, right? And we need to decode India, Let's not decode Europe. Let's not decode US. Let's decode India. And decode means that let's go places, Now North is looking so great. Just go in there and just build the businesses around it, right? So I think the businesses need to build beyond Bombay, Bangalore, or Delhi or Calcutta, right? So I think if you go there, I think there is no competition. But if you want to really work on Bombay, you will see 50 banks working in Bombay, right? Mumbai. So I think my sense is this, that you need to figure out the markets, you need to figure out products, figure out the whole team around it, and just deliver it, I am actually too excited to be for next 10 years that what this country can give it to us is just humongous.
In fact, I was going to go into that a little deeper with all of you, and just a general sense, whether it's geographies, whether it's average ticket size, whether it's demand. I mean, where are you seeing those hubs of growth going forward? I mean, India is huge, but if you had to pinpoint a couple of key drivers.
So at least I can say for ourselves, when we started Fino, we went from west to east. Starting from Maharashtra, we went all the way to Bihar and Jharkhand. The Bimaru states, as they call them, are being our biggest business drivers. Because you can say the lack of banking, the lack of infrastructure was an opportunity for us to set up that business in that. Now, when you look at, as Sanjay also said, Northeast and East is again a big opportunity from a geography point of view. South is heavily banked to a large extent. But within South also there are niche areas, like Kerala is again a niche area, somewhere in Andhra, Telangana also, you can do businesses. So to that extent, I would say in India, within India also, there are states where there's opportunities, and within Bombay also. When we call Mumbai has many branches and there are 50 odd. But if you want to service somebody in Dharavi, if you want to service Dombivli, these niche places where the migrants are more, the income levels are lower, you will not see many branches and ATMs in those areas. So opportunity is there everywhere. You just have to identify the right business model, the right kind of technology, the right kind of products, where you can actually service those customers. So I would say opportunity you have to look at from a point of view that whether you want to really do the hard work or not. If you want to do the same thing, see, low-hanging fruits are not there anymore. So if you are thinking that you can do more of housing loan, car loans and all that, there are only that much increase in production and there's many houses coming in. But you have to develop products, you have to customize products and identify geographies and the right teams to do that. I think that's where the key is. And that's where some of the new banks, the differentiated banks, are making a larger impact.
Anubrata, you want to jump in?
Frankly, I don't want to give a very general answer. I'll give you an example, right? Building on this point of differentiation which I mentioned of safety, right? Just as a factor. So we are actually the only bank in the world which has built a third layer of authentication product with a telecom company to serve an authentication message on a SIM. Yeah. So just very simply, apart from the OTP which you get a message which flashes on your phone which you have to accept or decline for a transaction to go through on your account. Very surprisingly, 80% of usage of that product is what we call an urban sophisticated cohort based in metros and tier 1, right? More than 1.5 million people use it daily. So I just want to resonate with Rishi and just give a slightly different example because, of course, the bottom of the pyramid is well established. The fruit seller in Bombay is not, well serviced. But with the right product set and the thought process, you actually have significant uptake for any bank of any size, which is possible. The other thing I want to mention, and I want to build up on what you were saying, and just give me a prompt if you're running short of time, is, look, we are unable to predict the power of convergence, which is happening in India today. I was in Singapore representing India in the Singapore FinTech Festival, and we were in a closed panel of digital banks. The real pain of a digital bank just to do KYC in a country like Philippines or Indonesia, which does not have identity in a biometric form is unbelievable. So we are blessed already with a world-class biometric-driven identity stack and world-first payment stack. So you've got identity, you've got digital, which is now going to drive the next shift, which is going to be data, which will drive the UPI moment for credit. And that will be participated by players such as payment banks through frameworks like Open Credit, using account aggregator data, or even data. By the way, we as a bank generate around 650 million data points every month. So that's going to happen. And we don't know what the power of that model is going to be as it unlocks. And of course, Sanjay's business, small finance bank models are going to really leverage that at scale.
I mean, yeah, I mean, just to kind of take on that, we don't know the power, but it's also sometimes a little overwhelming because you have big tech also getting into this, and no one is able to accurately predict the landscape. So everyone is, just to play devil's advocate, but the market is equally split between the opportunity as well as the risk involved as people try to get into this. But you touched upon how we have a lot of things to our advantage, and clearly, in terms of policy makers as well, they're intent on making this a reality and giving it the support that it needs. In your eyes, if you were to look into the future, and you were talking about 10 years, Rishi, but if we were to look at a more near-term future, what is the most immediate impact or reality that you see of some of this coming to light, that we start to see in play, and really see the true implementation of this? Because we've been talking about the opportunity and the growth, but as you said, it's taken a while to come. How soon are we now going to start to see the impact, the real impact?
You're asking me? Okay. No, so I think this time the basic difference what I am able to figure out from the system is this, that we as a country are more committed. I think this kind of commitment, this kind of enthusiasm, I haven't seen in last 15, 20 years, to be very honest. I think that is real takeaways, why we'll be more successful, why we should be more successful in coming years, right? And I think I'll be very honest that the way the government has played in the way they handled COVID, way their purpose is coming so straight and with so much pace. Regulators are doing many things. Our whole startup system, our whole tech system is being acknowledged worldwide. Our demand is huge, infra and all those things. Geopolitical positioning, we are very luckily positioned ourselves. So many manufacturing is coming, and the internal consumption, right, is now the realities, right? So I think what we don't need to do is this, that let's not build more hype. Let's not be around a number. Like, I read always that this time GDP will grow by 7%, tomorrow news is 6.9, then they say 6.8. Baba, 6.8 bhi acha hai, 6.5 bhi acha hai. Let's not be so linked to your so much of number, right? Let's just flow. Let's just go and execute, right? So I'm very gung-ho on the whole aspect this time. I know we have many missed opportunity last decade, but this time I'm seeing that, we as a country are more committed, policies are in place, much interest from Globe in this country, and Globe is suffering for their own reasons. So we are shining as one of the most important country in this world. So I hope that this time we don't miss it.
Okay, so closing comments from any of you, Sanjay, Rajeev, because it really is the consumer's market right now, isn't it? Regulators are supportive and watching out for the consumer. Banks, and there's so much opportunity between fintech and banks and small finance banks to cater to the consumer. It really seems to be a case where they're spoiled for choice at this point.
Yeah, so I genuinely think that post-COVID, this is a good phase for the financial services industry overall. My simple analogy to most people is that the industries which were challenged in the COVID phase would definitely have a boom in the post-COVID world. and a complete opposite industries which benefited in the COVID phase may have a little bit of slowdown or sluggishness post-COVID. And the examples are fairly obvious. If the hotel industry suffered badly in COVID, it's having a boom. Airline industry is having a boom. So because they were going through a pain, the demand could not be met. There were difficulties in growth, and therefore the boom, the pent-up demand. The auto industry is having a boom right now, so they are getting a demand. Whereas some of the industries which benefited, like a digital phase or something else, they are clearly suffering because now they're on a high base. A lot of the demand has been met and everything else. So I think from a simplistically financial services, which slowed down in credit, which suffered credit impact while the COVID phase was on, will see an environment where growth will be there. The quality of the credit will be much better, because after every crisis, when there's a credit crisis, the balance sheet, the pressure point, the stresses go away. So I see a phase of at least 2 to 3 years where growth rates will be good and the quality of the assets that we book on all our balance sheet will be much better. And so therefore, it should be good times for the consumer, good time for the financial industry players.
Look, in a country like India, what is fundamental to rewire is cost to serve. And cost to serve cannot come down without the use of technology. And therefore, in the great debate between fintech and banks, actually there is no such great divide. Payment banks are India's only sustainable fintechs with a banking license, and we are here to serve 1 billion people.
It's absolutely fantastic listening to you today and to the Big India opportunity.